The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Hi, folks. This is Basil Chapman sitting in for Darrell, and I usually do the opening call. I always do the opening call, 11 o'clock till noon Eastern Time. Same call-in number, 877-927-6648. And my service is the opening call. It is a daily newsletter, very comprehensive, goes through all the different indices, gives an assessment. Start off right here with the Dow chart. I write it up, and then I write even more. And I give the notation based on the Chapman wave methodology, and I use the MACD, the moving average convergence divergence, slow stochastic, and many other tools, technical tools. This maroon line here is the 9-period exponential moving average. I talk about specific candles. I talk about rectangle formations, etc. Also, I have a section called the Overview and Market Today. And in that particular section, what I said is, I'm anticipating that this is where the VIX 120-minute chart was right there. I said I suspect it will be pushing over 1467 to start leg B. If that happens, the market will come down sharply. This is a peak F top in the Chapman wave. That's usually where you get some kind of a pullback, and a pretty sharp pullback. That's exactly what happened. This here is Richard Arm's Trin Index. It is the short-term trading index, but I use it only for specific numbers. Certain numbers I look at on the upside, on the downside, and I have a particular way of using those numbers. And what I had said is, I had an indication that said, regardless how much we pull back tomorrow, there should be a rally in the E-minis, the S&P E-mini, of between 6 and 9 points, even more, and it should impact the cash index. Whether it comes from lower down, wasn't sure, but it is a 2-day signal. If it doesn't work the first day, it should work the second day. It has a really high correlation with success. That one and the one at the bottom, when it's below a certain number, that means instantly the next day you'll have a sell-off. So right now what we're looking at is a Dow that was down at, let me put this in right here. The Dow made a low this morning of 17,629, and it's 100 points higher. It's trading at 17,736. I'd say that was working. But the fact that we've broken key support levels, etc., is really, in a sense, it's a negative. But I like, when you're looking at a particular candle, you've got to assess the time frame that you're using. And in this case, I'm using a daily chart. We have to wait for the end of the day to see where does the Dow close? Where does the S&P close? If you're looking at in the 120-minute chart, I got a peak F top in the Chapman wave methodology. That's where you can often find the deepest and longest declines. And look what happened to the DIA from that doji candle top at 180. What was that? 179.82. It's dropped all the way down to, this is the deepest correction we've had in a very long time, to 176.22. Now, is it just an intraday correction, a 2-day correction? Now we're on our way back to new highs. Well, we'll see. Certainly there are a lot of buyers out there. We know that there are a lot of buyers out there. In the meantime, back at the ranch, let's just go back to what we're looking at here. What we're looking at is that the E-minis have come back more than 50%. They're trading only down 625 after being down over 20 points. And what we're looking at here is that the 2026 low is a trough F. Remember, we are just talking about a peak F, and now it's a trough F, and it's at this particular point, this candle, the 120-minute candle, looks like it wants to close above the 2044 level, which is the 9-period moving average, and it's challenging the golden line right there in the 120-minute chart, which is at 2047.24. And whoops, we just had another little bounce up. So this is very impressive action, and we'll see what happens. Now, what's interesting is that the volatility index spiraled higher. Where did it go? Oh, there it is. VIX. On X, screamed higher. It went all the way to, wow, 1668. In other words, it went higher. Wow. 1668 is the highest it's been since it had that big spike on the 20th, November the 20th, to 1574. So this is going to be a very interesting moment in the market. And what it's saying is, and what I said on my show earlier, is that watching this, that Chapman Wave chin gauge suggested that there should be a rally at some point, and that rally could take the Dow to minus 125, maybe even minus 98. That's where the truth is going to be told. Is there going to be a third or fourth selling spree? Well, we've had some before, and we went to the lower low. That's usually the tip-off. The lower low intraday. Let me show you something. Let me go to a 10-minute chart. Now, if you remember on Darrell's show, what was it, a week or so ago, I did Darrell's show, and I was showing how you could use the naked chart, and if I could find it right now, I'll show you something very interesting. Maybe this is it. No, I don't think that's it. No, that's not it. It's another one. Let's go to 10-minute chart. You'll find it. Here we go. 10 minutes. There it is. 10-minute chart. Look at this. On the 10-minute, where did it go? No, that's the 10-minute. All right, got to find another one. I've got one that only has the notation of, I hope, there it is. Come on, you be the one. Nope, that's the one over here. Yeah, that's it. You see this chart? This is the 15, the SH15. This is the March E-mini 10-minute chart. If you go to the lowest low bar, that's right here. I'm putting an up arrow. Why? Because it's gone to peak A right there. There's A. It's gone to peak B right there. And it's in leg C. This leg C, because it took out all those resistance points, should have a little pullback and then go to at least D above 2048. That'll be very interesting. Why? Because it's going to push the chart pattern without any technicals. I'm not using any technicals here. Above this entire resistance area. And let me show you something very interesting. If I take this resistance, what I normally would do, let's just say we were right here. We were right here. I didn't have a chance to do it this morning. I was going to do it, but I never had a chance. If I did this, and I put in a left side, right side price time match to that particular candle, the plumb line, I'll show you in a minute. The plumb line right here, the moment of total indecision, right there. Where is it? It's on that doji candle there. You still went lower, but you can see it's acting like a fulcrum. What it's doing is, now the price is bouncing below, above, below, above, below, and then boom, it takes off. But look at the pattern that it's forming. Look at this pattern. I'm going to take it from there to here, but actually what I want to do is just to go first to the most obvious ellipse, the left side of a cup formation. I'm taking it from there. I could take it from that candle. Let's go doji from the doji. I've taken the doji for one reason, taken the doji for another, gone to the low, and now I'm going to show you something very interesting. Look at that. This is the candle. This is the candle right there. We're testing that particular level and what I call my left side, right side price time match technique using the plumb line. And you've got to learn how to use that plumb line. There's certain candles, there's certain lows, there's certain highs. Now look at this, how interesting it is. Look how beautiful. Look at that. Now let me show you something else. Let me take this away and let me use this particular one. Yeah, okay. I wasn't going to use that. I was going to use, but that's fine. So what we've got is leg C. You've got the MACD rallying strongly. You've got the stochastic rallying above 80%, so 96%. That's positive. That says we should test the magnet line right there. This is the exponential, moving average exponential, the 200-period moving average at 2049. It should get there sometime in the next 20, 30 minutes while we're on the show. So this is going to be very interesting for a couple of reasons. One is, if I can just find it, that's a 5-minute. I don't want the 5-minute. That is a 30-minute. The 30-minute. Let me show you something very interesting. What I've got there, that green line is the exponential moving average, the 200-period moving average. Let me blow this up a little bit right there. Look at that green line, and look how support, resistance, bam. So is 2056 again going to become resistance? Well, we don't know. But I can tell you this, that if we get anywhere close to 2051, it's 5 points higher in the next day or two. Well, it's a 30-minute chart. Let's just say today or into this evening. There's just a really good chance it's going to try for the 2056 level, because if it's repelled from this 2050 level, this dashed blue line, that says be careful, because any break from 2046 back below 2039 will really be a disappointment and suggest that the rally is going to fail by the end of the day. So we have very specific things to watch. Look, VIX index, peak F in the 120 in the 30-minute chart. Look at this 30-minute chart. There's the 200-period moving average. If I did it from here, look how fascinating it is. In the Chapman methodology, you want to identify the lowest, most obvious low bar. And if all the technicals are confirming, you should get a move that takes you to at least a peak D. So this is A. There's a 30-minute chart on the VIX index. B. There's your peak C. There's your peak D. And there's your peak E within 2 bars, just a fractional high, down arrow, and whoops, you come down, and you keep coming down until you hit that level there. Look, stochastic turns around, MACD makes a nice W formation, and it pushes back up. Very important action. So now, and what's fascinating, look at this. You see, this is the volatility index on the 30 minutes. Didn't matter which time frame. No. Look what happened. If you go to the TLT, whoa, if I can find it, what happened here? TLT. Oh, that's music. That's what happened. I'll be right back. Basil Chapman sitting in for the one and only Darrell Martin using the Nadex platform of the Diagnostic Trading Hour. Basil Chapman from the opening call. And I'll be back. Take your calls at 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Darrell, take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and I'm sitting in for Darrell, just trying to find the chart that I had a moment ago. And, of course, I've already moved on about 10 charts because questions in the den I like to answer in the den as quickly as I can. Where was I? I was talking about, let me go here, I'll be able to, TLT, that's right. The 30-minute chart, if that's the 30, let me find the 30-minute chart. 30-minute chart, 30-minute, okay, I'll find it. Here it is. It's behind there. Is that it? Okay. So what we were looking at is the TLT. I showed you the VIX index had made a peak in the, right here, look, VIX had made in the 30-minute chart a peak F-top at 16.68, having gone in just a couple of days from the 11s to the 16s. Now it's having a bit of a rest, filling in the gap. And the TLT went to peak E and has made that H pattern at the top that says, be careful, and pulling back. And now it, too, might fill some of the gap, and it's at 123.20, having hit 123.97. So that's allowing the market a breather to go back up again. And you've got the ESH15 moving quite nicely in leg B. Whoops, that's not B, that's B right there. That's leg B. And so far the technicals are good, but it's the way that we treat now the high that was made back at 4:30 yesterday at 2,048. That's really the level that we're going to have to watch. 2,046 right now, having just bounced back to the 2,048 level. We're going to have to watch to see how that level there is taken out, if it's going to be taken out. Now, let's go back here. And the question of the den was EEP, which is Enbridge Energy Partners, LP. This is trading at 40.01. EEP is the symbol. The daily says it got repelled at peak E in the daily chart. It's pulling back. So far, the technicals are good, and it's good action today, up 64. I want to just check the XLE. XLE is not trying to rally, but I think it's very close to a bounce here, the XLE. We'll see. ERY is the opposite. ERY is in leg B, should go to C and D, so maybe the bounce in the XLE is not going to transpire. Let's go back to EEP. So EEP daily is saying, right here, EEP daily is saying good action, but until I can break into at 39.28, I need the 40.70 area or higher by Wednesday or Thursday without taking out 39.28. Very important support. So far, it's good. If you're long, stay long and just raise your stop, because if it starts to pull back below 38, it's in trouble. In the weekly chart, I've got an alternate count. And here again, because there's got all this flurry of activity here, isn't a continuous, fabulous pattern like the monthly. The monthly is in leg C, very strong. Stochastic at 81, MACD's good. But the weekly is saying, I'm having a little trouble here. I might need more time. I might need a full week or so before I can break to a new high at 41.68. But I have 38.37 as good support. And that's kind of what it's looking like now. Would I buy it? I'd have to wait, because if it was rallying, I'd buy strength. I wouldn't buy weakness. This is one of those cases. So I hope that helps you, J&J in the debt. Question I had earlier was, oh, yes. I had an email question having to do with... let me go take this. Oh, yeah, there it is. In the shorter term... Using the techniques that, I'm trying to quote today if I can remember correctly, using the techniques that you have at your disposal, how does the relationship of the Chapman wave trend gauge, what's the implication for the day? And the implication is that at some point in the day, and I should have actually planned it in my trading, I thought I was planning it, but I didn't plan it carefully enough. I should have waited for a little bit for that to kick in, and at this point I could have added some shorts rather than right at the opening. They're okay. So actually, it's longs and shorts. So at this point, it's for a fresh entry. It's a little bit, I don't know. We have to wait for the end of the day. So we'll see what happens. But whether or not that Chapman wave trend gauge has now done its job, because what it does is it triggers a rally, and very often it's from a low, just exactly what you saw today, but by the end of the day it peters out. It only has a certain amount of torque. It has torque and very little momentum, but when the momentum dies, it actually pulls back again, and that's what we're going to see. Will the VIX rally into the close and the market pull back, or the opposite? I'll be right back. That's what Chapman sitting here for Darrell Live.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization deviation capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back. Basil Chapman sitting in for Darrell Martin, and there it is, the naked chart. All I've got here are candlesticks. I could have had just the price, the bar chart. Didn't make any difference. All I'm doing in the Chapman Wave methodology is you try to identify the lowest, most obvious low bar and merely count each successively higher peak. Look, peak A, peak B, peak C. And you remember, what did I say in the Chapman Wave methodology? What do you want? You want to get to a D. There is your D. The S&P is now down only $3.75 after being down over 20. And this is amazing. Going from 2026 to 2048, just a space of a couple of hours here, maybe an hour or so. And that's really important, because what we're looking at here is that we've broken above the previous high. Now buyers are going to filter in, and you're going to see the VIX pull back. You're going to see anything that smacks of volatility start to increase the chances for people to dive in and say, oh, missed another opportunity to buy. This is going to be a very important moment. So I have a question here about EWZ, because there are so many charts like this. Let me just show you. There's a pattern that I talk about in the Chapman Wave methodology. Oh, this is the cup symmetry. Basically, what we want to do is the one that's the arch formation. It's the same principle. Here you're looking for ABCDs on the way up, but you're also looking for symmetry. We saw that in the E-mini that I just showed you, because I had done that analysis with the technicals earlier on. We're now looking at the arch, and the arch is a little different. Why? Because it is the upside down pattern. This is what we're looking at here, and that's the pattern that we're looking at. This is on slide 294, my CD introducing the Chapman Wave methodology CD book, and there it is. And what we're looking at is 38 was the round number low in EWZ. This is the iShares MSCI Brazil capped ETF. And basically what we're looking at is in February of this year, the week of the 7th of February, 38 was the round number low. Always look at round numbers, very important. Spiral to the upside, A, B, C, D, E. It even goes to an F, and it stops where? Right on the 200-period exponential moving average with a doji candle. And then it pulls back, and it goes trough A, trough B, trough C. Now, I call that a doji candle. Basically, you really like to look at a plus sign as a doji. This is a long-legged doji. I call a doji anything that opens and closes at the same price, and then you can define what kind of doji it is. Now, what we're looking at is we've got leg C down. You've gone to a lower low, 37.46. Well, many of the oils and anything related to, as Brazil is related to commodities, have gone in this arch pattern and failed to come back and retest it. So my theory, based on the Chapman Wave methodology, is that the bar that takes out the left side low bar, most important low bar, in other words, the 7th of February, that weekly low bar, that's happening right here today, is the very bar in a weekly chart that needs to, either this bar or the very next bar, has to spiral back above 38, that low bar, and close above it. Because if it closes below it, it just continues the negative action. So it's very clear. So here's the question. What about EWZ? And I would suggest to you that there's that M pattern that I often talk about. What is the M pattern? Well, it's a pattern where you go down, 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 down with the little scallops or arches to the downside. And let me just go to it right now. And when finally it settles down, it makes maybe a larger arch. There it is, look, down. It's the H pattern, lowercase h, another lowercase h, those red lines, another lowercase h. And then what happens is it says, okay, I'm tired of the h's, I'm going to make a lowercase m pattern. And that m pattern is formidable. Why? Let me show you why. Look at this. If you go to, have you ever seen a pattern like this? If you go to the M pattern, you can stay there in a rectangle formation just trading between those lines for 3, 4, 5 years, as oil has done. Look at those H patterns. Finally, it's broken down. So this is the candle that went underneath the February of 2009 low. Within another candle maximum, it's got to bounce right back above that low in this continuous contract above 63.65, trading at 63.18 right now. So now let's go back to what we're looking at, and we're looking at the EWZ. This is the ETF that you can use. It's not the index. It's really it's made up of enough stocks of that country. There are a lot of EWs, EWZ, EWA is Australia, EWU is the United Kingdom. So this is the EWZ is the Brazilian one. And it's saying right here, especially based on, if I can just get to it, I wonder if I can. On the 120-minute chart, this is the first start. See a little second, that doji after the low bar? It says at 38.02, if there can be a bounce to 38.29 or higher, and then you can turn that 9-period moving average in the 120-minute chart into some kind of a tradable support level, then you're looking at some kind of a turn that can take you to the left side peak, the left side peak in this case, 39.59. And you look at this. Here's your trough. This is the first real start of attempting in the 120-minute chart to make some kind of a base. So it goes peak A, peak B, peak C, peak D, peak E, and peak F right above the 200-period moving average, and then it fails, comes all the way back down, and then what does it do? It takes out the left side low and goes even lower. So now this is the start where the technicals are at least showing that they're trying their best to turn up. So I'm going to say that as far as would I be buying this, you know, it doesn't look great. Let me just have a drink of water here. It doesn't look great, but I would say to you, if ever there was an attempt at a start, what's going to happen is going to have to probably make an H pattern and retest the game, but it's a percentage trade. If you wanted to nibble at it here at 37.99, I wouldn't even put a stop under 30. Yeah, 37.46 is the low. Make a stop at 37.45, because if it takes it out, you have to restart the whole thing over again. I would say you could nibble here. This is the candle, yesterday's candle. The ugly candle was 39.13 as a high. You want to get back into that. You want to be above it within 3 days. If that doesn't work out, it's not going to work at all. So as a risk reward, start a small position. I'd only get into a bigger position after a week or 2 or 3 of really testing very nicely the lows in the 37s now. So that answers that. And so, yeah, risk reward, that's the only way I would do it. Let's go to a couple of other things. Want to do some 10-minute charts here? Because I know Darrell always does these 10-minute charts. So what have we got? We've got this naked 10-minute chart right here. This is the most important part. At 1:45 Eastern Time, in the next 30 to 40 minutes, if there's a spiral to a plus sign in the E-minis, that's going to be very positive. If instead there's a sudden slide in the Dow further and the E-mini goes down to, goes under 245, 5 or 6 points lower, that's going to say, uh-oh, failed attempt. Now let's go to the daily, to the 10-minute with the technicals. So if I can just find it here, 30 minute. Oh, I didn't know I was going to do the show, so I'm a little nonplussed here. So there we go. Look at that. So there's your C, there's your D. Now with the technicals, I can give you a much better analysis. Not that the chart patterns change, but the filler changes, all the information inside. The unbalanced volume says we're a little toppy here. We might need some time. Then unless there's a real quick spike to continue this pattern, we're in the area of sideways consolidation. 2045 on the E-mini is going to be really important. Number one. Number two is having made leg D at 2050.75, this bar here has the same high. This is still D. You have to have a lower bar by 25 cents, being the futures as 25 cents increments, to make a peak. And if that peak just goes sideways, that's a high-level consolidation. The MACD is very strong, which suggests that there's going to be buying pressure coming in for a little while longer. Stochastics at 92%, which suggests that the 2045 level, where the 9-period purple line is going to give you a lot of information. Number three, the histogram is very high. These green vertical lines just now starting to contract a little bit. We'll see what happens there. And if I go to the naked chart, you see that doji candle there? That's this doji candle there. See that doji candle kind of corresponds to 2046, almost to the 2045 level. So this is the area of support that I'd be watching really closely. So that's the 10-minute chart. There's the 200-period moving average. I'd love to be able to go back to the 30. Oh, this is the 5-minute chart. Okay, so the 5-minute chart. No, yep, the 5-minute chart of the E-minis. Look, there it is. And the unbalanced volume is turning down after making A, B, C, D, E, and you've gone to a leg F in the E-mini. Now, I must explain something. For those of you who are used to the Chapman wave methodology, you remember that this right here, where you've got D, and within 3 bars, you break to a new high, you can do this. You can circle it and say, hey, that could be a Chapman wave instant restart. This could be E/A, F/B. But there are a couple of technical indicators here. You see this red line, the relative strength, is failing. See, the on-balance volume is pulling back, but it hasn't broken down, but it is pulling back. You see this green line is flattening out. That's the fast-moving average, or the 9-period differential of the MACD. That's the slow one. So it's saying we're getting into an area where it's going to be tough to break out. Yeah, something's going to have to happen to find those extra waves that just push up towards the shoreline. And in the meantime, back at the ranch, if I'm looking at something like... let's see if I can follow that up. So I don't want to do anything other than VIX.X. So yeah, we've got the VIX 5-minute chart, and from that low bar of 1392, it's gone peak A, B, C, D, pulling back. Now it's trying to find some support in this gap. So we're going to be watching this closely. This says... I haven't yet got strength of 3% in the MACD, in the stochastic, and the MACD is still quite weak. Going to be watching this really closely. So sometimes I like to put the two together. Now let me do something else. Take this away, and let me go to the TLT 5-minute chart. The TLT, did I use this before? No, I'm going to not do that because I'm going to have too many charts to look at once. So that's a peak F in the 5 minutes. So let's leave that for now. It says 2047.45 to 2045 and 2043.50. Those are the levels that I'll be watching if there's any sell-off in the next 15 to 20 minutes. Okay, so I'm looking at this and I'm saying, all right, there's a lot of information. What if I applied it now? This is a little bit behind. I'm going to go to the gold chart. Gold chart now, the futures are actually trading up 38 at 12.33. Oh, I got it at 12.38. All right, so normally this is a little bit behind. Have I got this in the 10-minute? Let me just see if I've got it already done. In the 10-minute. Yes, I have, right here. So it went to a peak G, an unusual peak G. Why? Because I can't put the down arrow in until the MACD starts to turn down with the stochastic. It all coincided right there. But so far, this is a high-level consolidation. In fact, normally I would go like this. I'd put in a flag right there or a rectangle. But this is even more important because what it's doing, the gold contract, what it's doing is it's doing this. Remember, this is a 10-minute chart. So if you're using the techniques that Darrell shows you in his program, you can make them simple as well. Look, here it is. This is the naked chart. Let's just go from the bottom. Look, the low bar, when you're making a bottom, can't be a high bar. So that, you can't put an up arrow there until that bar. So technically it's there, but that's there. Now, the reason why I'm saying this is that this is not A. Why? Because right here, you don't know if that's a trough. And you can only go from a trough to a high bar by moving to the right. So I need to know that, so this is wrong. That is not an A. Wrong. Why? Because, that was a mistake. It's not an A because I don't know it's a trough until afterwards. I got a higher low bar. So now I can start. A, B, pulls back and makes a little mini. A, it didn't break. If it breaks that low bar, it starts all over again. It's done. That starts a fresh buy signal. And then it goes A, B again, and now it goes to C in the new one. So I'm using the new one because I want to get to a D quicker than, I don't want to be waiting. Look, if I waited, this is a parallel high. If I waited for C to be there, and it turns out that that was a D, and it has a very sharp pullback, I'm still waiting for the C, and I'm stuck. So look what happens. This goes D. It goes E double top. Make your chart. There's nothing else, all right? Pulls back. Now I'm going to show you something very interesting. I'll be right back, Basil Chapman, and take it.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
It's Basil Chapman sitting in for Darrell Martin and Diagnostic Trading Hour. So this is what we're looking at. Look, the 5-minute E-mini gave a pullback. Oops, we weren't there before, but I'm going to go there now. Gave a pullback sign at peak F. It hasn't gone very far. It's holding the 9-period moving average of 2,047.25. That's the 5-minute chart. The 10-minute chart, the naked chart, went all the way down. Peak D is where you can often get your deepest correction. So far, it's gone right to the candle we were talking about. And what gave me the clue that that candle would be tested? this pattern right here. What said that there's still some internal strength, the fast-moving average holding so well. What we were looking at before, I can't even remember, we were looking at gold, the gold. So here's the gold, and I went to that naked chart. What I did before is I started from the next low after the peak E actually it went to, and then you go A, B, 10, 6, yeah. So A, B, C, D. This could have been an instant restart. So it goes EA. That pullback looks very much like it's only an F. But then what happens is I can just imagine that the MACD was still holding very well here because it went all the way to a G. And now it's pulling back and it's forming this pattern here. That says that gold's had a high-level consolidation after a spectacular move. It's up 38.40. And one of the reasons why we went long this morning after all this time, finally we've got our trade on gold. I think just a trade at this particular point, we'll see what happens, is because it looked like the dollar was pulling back, had made a significant short-term peak. Now we're going to see what happens. Is gold able to sustain the rally? Well, looking at the technicals, the MACD is good, but not great at this point, and the stochastic hasn't gone to 80%. If it's going to go from 65 to 80%, it'll push gold all the way into the long wick, into the body. If gold can trade this contract, the February contract, can trade even for 3 minutes in the 1234.20 or higher area, it should in fact retest the 1239 round number high that was made right there at 1040 on the 10-minute chart this morning. That's number one. Number two is I wanted to just quickly do a quick overview of my work. So basically what we're looking at, let me just go back to this, is that we're looking at some kind of a consolidation occurring here. I don't know how deep it's going to be because so many charts have made D, E's, and F's, but there is so much buying, so many fund managers are missing out and keep using every dip, especially in the biotechs, to just grab these stocks to try to run them up into the year end. We'll see if we're able to hold with a high-level consolidation. A lot's going to happen at Friday's close. So two things. One is, if the Dow closes today, instead of being down 83, it's down more than 138 points, that's going to say, hey, any rally, there's going to be what I call a Chapman wave Roman candle right here. If there was a negative close, somewhere in the 17,747-ish area. If that happens, or a little bit lower, that says that at any point this week, if there's a trade into half of the wick, in other words, if there's a trade into the 17,700 level, and it holds there for a few hours during the day, there's a good chance we're going to retest the bottom of 17,629. If, on the other hand, there is a rally and the Dow closes only down 34 points, S&P is actually up a point or unchanged, then what we could see is just a sideways choppy move, just like we saw here, but with much greater amplitude. You realize that this is the 31.23. I think it's about the 33rd day from the low that was made right there on October the 15th. And because of it, what we're looking at, this is the first period of volatility we've had. Look how it's walked the 9-period moving average, the Dow. So this is the first sign to say, hey, be careful, getting somewhat toppy over here. And watch the VIX index. Hey, see, for Dave, it's a great show as always. I'll be back tomorrow, and I'll be back with Tom Payton this afternoon.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.